Tech hardware triumphs while software sinks amid Middle East oil disruptions.
Welcome. This is Daily Market in 3 minutes. Let's dive in Wall Street.
The S&P 500 closed at a record high of roughly 7,140, up 1.1%. The Nasdaq Composite surged 1.6% to close near 24,660, and the Dow Jones Industrial Average added 0.7% to finish around 49,490. Despite the broader market rally, the Magnificent Seven saw mostly downward pressure today, with Meta, Microsoft, Nvidia, and Tesla all posting significant losses. Information technology was the winning sector, jumping 2.3%, while industrials and energy also posted strong gains.
Real estate and healthcare were the notable losing sectors today. Bitcoin dropped to around $78,000.
Gold slipped 0.6% to roughly $4,726, and silver dropped 3.2% to $75. WTI crude oil gained 1.6% to nearly $95 a barrel. First, the ongoing Middle East conflict and the strict blockade of the Strait of Hormuz sent WTI crude oil prices marching higher again today. President Trump extended the military ceasefire indefinitely, which provided enough immediate geopolitical relief to push broader market indices to absolute record highs, while directly driving the energy sector up 1.1% as supply constraints persist. Second, we witnessed a massive, defining divergence in the technology sector as corporate capital flowed heavily into hardware. Blockbuster earnings from Texas Instruments, which soared nearly 20%, and strong after-hours results from Intel, directly fueled the massive 2.3% surge in the information technology sector.
Third, software stocks suffered a brutal, widespread sell-off today. ServiceNow plunged roughly 18% after management warned that the Middle East conflict is actively delaying major global software deals. This severe drop dragged down massive peers like IBM, Microsoft, and Salesforce, perfectly explaining why the Magnificent Seven struggled today despite the broader market hitting fresh, all-time records. The 10-year Treasury yield rose to 4.3%, while the 10 to 2-year yield curve spread widened to over 31 basis points. The US dollar index climbed to 98.6, and the VIX volatility index hovered near 19. This combination shows that while equities are rising, financial conditions are quietly tightening as investors hedge against long-term inflation and war risks.
The CNN Fear and Greed Index registered a score of 66, indicating greed. This reflects retail euphoria, even as institutional investors quietly load up on downside protection. Looking ahead, the market outlook strongly suggests we are reaching a speculative blow-off top. With extreme capital concentration in hardware, catastrophic weakness in software, and ongoing global energy shocks, the current record valuations carry severe, underlying risks that traders should not ignore. In the coming 7 days, keep an eye on the Bank of Japan interest rate decision on April 28. Then, watch for the U.S. first quarter GDP advance reading on April 29, followed by the crucial core PCE inflation data on April 30. As always, this video is for informational purposes only and is not financial advice. Please like and subscribe for more. See you next time.